OPEC, investment grade bonds, what's next? What's up, everybody? Welcome aboard. It is Bubba's Bottom Line, and it's always great to be here with you. And of course, a lot of things going on, and then there's a whole bunch of nothing going on. And if we just take a quick recap of what happened last week, the markets were relatively flat. It felt like there was a little bit more, but basically it was relatively quiet. We had rallies on a Tuesday and Wednesday on extremely light, dull volume. Not a lot going on, which is just an indication that, hey, the bottoms may be in. We had the VIX collapse, and then all of a sudden came Friday, and we had a little bit of a sell-off. Now, again, the sell-off was not major, and look, down 200 today is no more than, if you want to just walk the clock back, is no more than 20 points when the Dow was 1,000. So again, we're not really concerned about the price of the numbers. The numbers are just bigger, that's all. But the percentages are smaller than they've ever been, going back, if we go back in time here. So that's something, but the market was interesting, that it looked like we were trying to break above that downtrend, but we have not. But it's still not clear when you look at the overall, again, you look at market volatility, you look at the VIX did bounce from a bottom in the mid-14s or so. So we're not in that volatile range anymore. We're not seeing a lot of excitement, and we're seeing extremely light volume. So this is not a market that we'd want to be overly enthused about on either side of the equation, because it looks like the tops are still in the market. However, it doesn't mean that we can't get a little bit of a rally from here and, let's say, rally back to 25,500 or something around there. We thought last week, we said that 2,700 in the S&P would hold, and it traded a high of the week was 2718 before falling and failing. So we'll see. Again, this is not a market to get overly aggressive on either side of the equation. I think when you look at some of the things that are going on, and if we look at the oil market, of course, President Trump tweeted out that oil was being manipulated by Saudi Arabia and by OPEC and by everybody else, and of course he's right. We can talk about it, we can hide from the truth, but I don't know if all of you have forgotten at the damage and the job that OPEC has done all of these years until the United States became self-sufficient on oil. I don't know if all of you remember what OPEC did and what a bunch of crooks that they are. In fact, because I called them crooks, I got banned off of TD Ameritrade TV because I said that I told the truth. And I think that's what the problem we have here. And one of the problems we have in this country is we don't want to hear the truth. Now, why we don't want to hear the truth, I have no idea. OPEC is crooks. The Fed is ignorant. USDA puts out a report for cattle on feed after the market's closed into the weekend. None of those things are smart. I can't, there's nothing that I can justify behind any of that information that we see, all right? Again, if we just want to break them down piece by piece, OPEC has held up the United States and others forever, right? Oil was $9 a barrel. And again, I understand inflation, but it should not be $70 a barrel or just under it right now. It should have never been $160 a barrel. And especially now where we sit with how much oil and we have here. And yeah, you hear every expert say, well, there's not a glut anymore, blah, blah, blah. I go, okay, great. We've got a lifetime supply of oil in this country. And if the big oil lobbyists weren't so much in charge, then we wouldn't even be using oil. Okay, even the ex-president of Shell Oil says we should be using natural gas. So OPEC, we know they're crooks. That's it. And TD Ameritrade banned me for that. So okay, hey, I don't care. I'm not interested in going somewhere where the announcers or where the pundits want me to give their opinion. I'm there to give my opinion. Now, as far as the USDA, okay, with the USDA, again, once again, we come to another big report. Now, why would anybody want to open up a big report into a market that's closed, into a weekend where people have a chance to get nervous about what the report was? It makes zero sense. Again, is ignorant as ignorant can be, but again, that's the way it goes. In the meantime, oil did have an interesting week itself. At a key, what we would call a key reversal on Wednesday into Thursday. where the markets actually spiked up, made new highs, turned around, and actually closed lower on the day. So that is known as a key reversal. Now again, I believe oil is going much lower than it is here, but it doesn't mean it won't go a little bit higher first. I cannot tell you that it will not go up from here. I can't guarantee that it will go down from here. Obviously, if I could hold forever, I would just stay short oil because, again, I believe at some point it's going back down significantly lower. But at the end of the day, right now, it's at a key level. I am short oil, and I will continue to try to stay short oil. But if it does go over 70, I'll have to say, I'll have to cry uncle. Enough. I can't take it anymore. But right now, I'm still hanging in there and not worried about it. When we look at the grain markets, they had a pretty rough week last week, and not really a surprise. I mean, I am not worried at all. I'm still saying that those are the spots you want to step in and be buyers. I think you want to look at levels like 380 in corn. I'm a little concerned, we're below 1045 or so in soybeans, but we're, right around there, so we're okay. And 470, 465 in wheat, I think are great spots to step in. Again, I look for a potential big market here this year in those areas. So for me, these are just buying opportunities. Again, when you tie everything together, to me, it's a buying opportunity. We've had a very nice move. We recovered from the trade wars and from the tariff talks, which to me are ridiculous. Another story, but we'll talk more about that in my commentary. But at the end of the day, they look fine. And then, of course, the meats, the report looked to be relatively neutral. The pricing of the price in action seemed to be relatively neutral, because if you look back and you see the action on Friday or even last week, they were a little bit softer. But we said last week that we expected them to be a little bit softer. We said last week that they were up, especially feeders and hogs, they were overbought. So there was no reason to believe that they would not have a little bit of a sell-off. I think they're a stone buy. I think we go higher. I think right now, the money, investment money, should be going into the agricultural space. I believe that that's really the spot where we want to be right now. Because when you look at the bigger picture, I believe that equities will start to sell off a little bit. I believe that new money will need to go somewhere, and I think there's no better place than agricultural products that have been beaten down into impunity because of a lot of the ridiculous policies we have. It had nothing to do with the trade war stuff. So those look okay. The Bitcoin had a nice week, as we said. Bitcoin is looking to be was looking for a rally, and we had a very, very solid week. So I think that you continue to look in that space there, and I think you look to continue to buy. Bonds got clobbered. Which the bond futures got clobbered, which means interest rate went higher. And of course, the 10-year closed at a 6-month or 7-month or 8-month high. I forgot to really look at the exact number, but I know they closed at about 296. So we're probably, very good possibility that we're going to punch through 3% this week. Now, is that a magic number? Is that are we looking for Jack and the Beanstalk or Jack and the Magic Beans or the magic bond market? I think what you really want to look at here is that 3% is a number that people can live with. If you continue to hear them say, well, the stock market returns 3%, well, if 10-year notes start returning 3%, then a lot of money that is investing in the market that does not want to be there. Now, you have to remember that this is very important. There's a lot of money that is invested in the United States equity markets that doesn't want to be there because it's not safe enough for them, because they're not stock market investors. Now, I'm a stock market investor. I love the stock market. I think there'd be nowhere I'd ever go. But there's a lot of people, fixed income people, do not want to be there. So you get over 3%, and all of a sudden you're now starting to match in and eliminating chase for yield, plus the fact that you can lock in a 3% yield potentially. So that would be something to be looking out for as we start to bubble up here. Besides the fact that we do have a stock market bubble, and even with the great earnings, we haven't been able to get off the edge here. So I think there's a lot looking at there, and I think the other big thing we look at is the inversion of the yield curve, where 2s are catching up to 10s, which is obviously backwards. It would almost be considered like backwardation in the commodity markets when short-term money is more expensive than long-term money. So what we're really starting to see is a lot of issues that nobody wants to address. Nobody wants to talk about the debt. Nobody wants to address the inversion of the yield curve. Nobody wants to say that there's anything bad, because all we know right now is that we can kick the can down the road and hope things go on. But I think it's very interesting that when you look at even the Fed people, now again, I'm still not a Fed person, as you all know, but From my understanding, and again, I'll have to do some more research on myself, but Chair Powell has said no to a couple of things, and it seems to me that he may be a little bit more fiscally responsible and not in such a hurry to continue to create new money, and is indicating that they are going to continue to raise, which is the real thing we need here. We need higher rates to really free up liquidity and capital as we go forward, because again, even with the cheaper money, the small guys cannot borrow, okay, which is going to create a problem in a lot of the investment grade bonds that are out there and things like that. This is another issue that nobody cares to talk about as these investment grades become illiquid, as corporations build massive amounts of debt, as they continue to borrow and borrow and borrow because of the cheap money. Well, what happens when interest rates do go higher? Now, you cannot hold them down forever, and we've seen some dramatic movement here in the 10-year and in even the 30 and in the 2s. So, you know, we see this starting to change, but yet the people that are responsible, the people that are in charge, are continuing their mind that this time is different. It's not the same market as we've always had. Well, of course, we all know that's ridiculous, and there's another category in the ignorant pile is this time is different, because the markets themselves are never different. They're going to do the same things over and over again, and they're going to find the weakness. It's like, you look at a sport, and a weaker player has to go in at the last minute, an injury or whatever. The ball always finds it, right? The markets always find the weak spot, and they're going to find it here. And you're starting to see a lot of these things up. Corporate and high yielding bonds are becoming illiquid. There's the bubbling up of another potential crash and collapse in these things. And that is, again, where I go and say, see, this is what can happen. Now, again, it does not mean that you should be out of equities. It doesn't mean that you should be shorting equities. But what it does mean is you should learn how to protect and keep yourself intact when the next great fall comes, because it's going to come. There is no way that it does not come. It comes. So the question is, will you be prepared when it comes? Will you be properly set up when it comes? And more importantly, though, not when the bubble pops and when it comes, will you be prepared to get back in when it reverses? Because what do we know? We know the markets go up 8% year over year. So it's really not being prepared for the impending collapse, which is important, but it's how you handle the impending collapse so that you can be prepared to buy again when it's at the bottom, or to just stay in. Now, that's one of the things that's very important that investors should understand. If you're a pure, true investor and you don't want to hedge and you don't want to protect, you should not be moving back and forth trying to time different cycles or different segments of the market. If you're going to stay in the market and just rotate, try to find different assets within or different stocks within that equity market, then you should just stay where you are if you like what you're holding. That's the whole key. And don't let the markets get you and let you panic you out. That's where the panic comes in. That's where the puking comes in. That's where the tap on the shoulder comes in, says get out. But if you're just purely investing and not leveraged up and investing money that you don't have to worry about, then it doesn't really matter. And that's really where we come back at the end of the day and say, hey, see, that's what we're talking about. If you have good stocks, good holdings that you like, and the companies are solid, then understand that there's going to be a market meltdown, but also understand that the market is going to, at some point after the initial meltdown, will find a support level and make new highs, as it's done for 150 years. This is Bubba's Bottom Line, and I am Todd Bubba Horwitz, and we're going to step out here for a break, and we will be back with more of Bubba's Bottom Line after the break. What's up, everybody? And of course, I'm going to remind you that about our high school investing program. As we come down and wind down another school year, we really need to gear up going into the new year, the new school year. And of course, right now we finished the year off with about 475 high schools. And if you would like to be part of helping us get to 47,000 high schools, we're looking for some help. I have supported this program for almost 8 years now, and we're looking to go into and continue to give away free. This is not a profit model. This is a free giveaway. If you'd like to help us, check out highschoolinvesting.com, see what we do. And if you like what you see, go to Patreon, patreon.com/Bubba Trading, and you can help us out with a little donation. And for those of you who do, I will give you one free week of my futures recommendation if you'd like to check that out. In the meantime, don't forget to catch the Bubba Show every day at 4 to 5 Eastern at LibertyTalk.fm. And this week, very special guest, our good friend Danielle DiMartino Booth, from the author of Fed Up, also formerly worked for the Fed, and Stanley Fischer out of Dallas. So make sure you catch the Bubba Show on Tuesday, but catch it every day, 4 to 5 Eastern at LibertyTalk.fm. And now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you, and of course, we've got a whole bunch of things that are out there that are problems. And I think one of the big things is, and this is one of the things I think you start to see in overall markets. Tesla is being sued again. Now, again, lawsuits are lawsuits. I mean, they've all been sued. But, usually there's a little smoke before the fire begins. And, we've said for a while that we thought Tesla has a chance to go out of business. Love the car, love the technology, and that's not going to go out of business. But the actual business itself that's run by Elon Musk, that is run out of, I think, unless they can get another secondary, another round raised here, I don't know how they can make it. And again, I'm not predicting to go out of business tomorrow, and I'm not telling you to sell the stock tomorrow. I do think the stock is a short, but that's up to you. But at the end of the day, I think that the company itself is in real trouble. Okay, and it just starting to look, and there's too many things popping out. And we often hear about the dumb money and the smart money in markets. And I think that, again, I'm not saying my money's smart, my money's dumb, and I'm not saying yours is dumb or smart. What I'm saying is that when you logically look at the picture, and the first thing, the first warning signs that are always out in any market is when people start to justify that this time is different, okay? Because we know it's not different, all right? Let's agree that the markets are never different. Nothing changes, because when you're dealing with humans, you're dealing with human emotion, you're dealing with money, it's always the same. It doesn't, the product can be different, the reason can be different, but at the end, it's always going to be the same, all right? So when we look at it from that standpoint, they're already, the advisors and the pundits are trying to tell you that this time is different. They're trying to convince you to stay in the market, because obviously everybody is happier in a bull market, see? Everybody's happier when the markets are going higher, okay? But at the end of the day, there is a lot of concern out there. There is reasons to believe there's troubles coming. The jobs suck. You can talk all you want about the great jobs number, and President Trump can talk about how good the numbers are. The numbers suck, okay? People are not making enough money. That's the bottom line. We talked about this last week. 8 cents an hour doesn't cut it, okay? You've got inflation starting to run away a little bit. Starting with oil and other things, which brings us into the artificially priced oil, right? Which again is something that we're obviously dramatically against. But this is when you allow the Federal Reserve to dominate at some of the things that they do, you've taken away what we talked about before, is the free market system. So if you take away the free market system, you can now let these things happen, and that becomes another one of the bigger issues. So when the pundits and everybody else starts saying to you, hey, it's okay, it's as I said before, it's the old vote of confidence to the coach. Your job is great, you're a great coach, we love you, and tomorrow we'll fire you. This is the same thing with the markets. Again, that doesn't mean it's going to wait to be tomorrow, but we have kicked this can down the road so often and so long that eventually something has to come to pay the overall bills. Now we hear about manufacturing in this country continues to decline. All right. Now, if the jobs are that great and everything that we're trying to see is that great, then I think you would find out that we wouldn't have that problem. Now, this ties into where the hindrance of what is going on with the administration, and because of right now it's the left, and again, I don't blame one side or the other, because we'll talk a little bit more in the commentary as well. I don't blame one side or the other, but there are hindrances to what the president's agenda is, which the president's agenda is to bring real money here. And that, I think, would happen if you could get around all this ridiculousness that goes on in Washington. But, the problem is that manufacturing jobs are going away. Solid, high-paying jobs that more people qualify are leaving this country, okay, and have left the building long ago. And I mean, again, we understand that if you are a programmer or tech savvy, then you're in pretty good shape, because there's plenty of jobs, and there's too many jobs, not enough people to fill them. But that's the issue. We don't have the education. A lot of us are not. Certainly, I wouldn't be equipped to do anything like that. I would need a job that would be machine tooling, and I'm not qualified for that either. But I mean, something in that nature, because I don't have the education, I don't have the knowledge, so that would make a problem. So that's why we don't see good jobs. That's why we have these service jobs continue to grow. But in the meantime, you've got retailer going out of business. You've got more service jobs being created because the need for actual building of things is not there anymore. You've got Amazon taking over the world and systematically destroying small jobs, small companies, and small business, which is the way it goes. Now, again, this is a lot due to, this was made possible by the Fed's ignorant policies, okay? Think about that for a minute. When the money faucet gets turned off, the ability for the small business to lend, or to borrow, excuse me, but Amazon has almost a free reign at it. What do you think is going to happen to small business? They're going to continue to pound and push down and put the small business out of business, because again, when we small business do not have access to capital, and we can't be on the same fair and equal borrowing scale, we're going to be put out of business. And that's exactly what's happening. I've talked about this for years, and I think this is exactly what you're seeing right now. This is almost the plan and the agenda. If you go back into 1913 when they put the Fed in play, this is was their plan according to some of the theorists and some of the conspiracy people. But if you think about it, look what's going on here. Big guys had no problem borrowing money. Little guys can't borrow any money. So now you're seeing the melting of small business in America, and not because it's only Amazon taking it away, it's because Amazon is dominating the market and really putting people out of business and selling a lot of product for under cost because they get it back on the membership fee. But my simple point is this: if you're not on a fair and equal playing field, the same as the big banks. Why do you think we're going to have another banking problem? Because the little banks are doing a lot more construction loans. They're doing a much more housing loans. We've got subprime borrowing coming in again because that's the only way the little banks can compete with the big banks. This is another issue that has been created by this Federal Reserve and by the government the way it sits, is they allow these things to happen. As much as they whine and bitch about the AT&T and Time Warner deal, and these big conglomerates, they let the banks be monopolies, which is, basically what we've done. They let Amazon be a monopoly. And again, I'm not mad that Amazon's so big. I'm mad that Amazon was allowed to get so big without competition. And I think that is one of the problems we see, is we do not have competition in many industries. And that is the issue that I'm worried about, not whether or not they're a monopoly or not. If you can get to be a monopoly, if you can become Standard Oil legitimately, if you can become AT&T, okay, when they busted that monopoly up legitimately, okay, because right now, for example, and one of the things that bothers me the most is cable TV, or excuse me, internet. In my neighborhood, I've got one choice for internet, which is Comcast, and I'm not happy with it. But unless I want to put in a DSL line for 4 times as much, I've got no competition. AT&T isn't in this neighborhood, and very few areas in Chicago have more than one vendor for cable TV. So where do I get a chance to be fair and equal? That allows them to continue to grow bigger. But that's the story for another day. In the meantime, what are we seeing? Well, our GDP is, we continue to hear the talk about growth. Anybody really believe the growth numbers that they're spewing out there? They keep coming down. They started out at 5%. Well, first of all, during the campaign, it was promised 4%. Then somebody came out with 5%, and now we're down to, well, maybe we'll be at 1.5% or 2%. Again, it's not what we see here. This is the issue and the problems that we deal with. Okay, now, again, you're starting to see a big deal with investment grade bonds. They're becoming illiquid. You're seeing the market starting to panic a little bit about that, and of course, there's going to be some problems. And you're starting to see, even in our millennials, some of them working full time still can't pay all their bills. So this is going to be a problem, and that's what I think you're going to see. In the meantime, let's see how the markets look again. Remember, the markets rule. and the price action rules. So we're not going to get too excited. We're not going to get panic one way or the other, because that's not what we do. We sit back, we evaluate, logically think about it. In the meantime, we're going to step out here for a break and come back with my commentary. This is Bubba's Bottom Line. Todd Bubba Horwitz, and we'll be back after the break. Don't forget to check out highschoolinvesting.com. If you'd like to help us out, please do at Patreon, patreon.com/Bubba Trading. Don't forget to catch the Bubba Show every day, 4 to 5 Eastern at LibertyTalk.fm. And this week we got on Fed Ups, Danielle DiMartino Booth, Fed Up, her book, and she's great and really smart and understands it. So make sure you catch the show every day, but Tuesday at 4 Eastern, we got Danielle on. In the meantime, let's head back to Bubba's Bottom Line. And welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, every week I get to do my personal bitch or my opinion piece. And, you know, I've been going through listening for the last couple of weeks, and you know, with the trade wars and the tariffs and Saudi Arabia and OPEC and the government and I don't know about you, but I'm about to lose my lunch. All right, between Nancy Pelosi and her crumbs, her rendition of the crumbs comment, and Booker and his pounding on the crumbs comment, and McConnell with his kind of threatening the president about trying to redo this omnibus bill, which is one of the dumbest. I still can't believe that he signed it. That is really my thing. I cannot believe we can't get someone to say, you know what, we're shutting down the government. We're going to get this bill right. We're going to stop all this ridiculous spending, and that's the end of the day. But of course, we know that's not going to happen, because you've got too many people in Washington that have too many edges. And here's what gets to me. Okay, this is all designed and run by the lobbyists. All right, this is not run by anybody else. This is the big money and the lobbyists that control all of this stuff. And that's, you know, you hear about the deep state and the stuff behind the scenes. And again, I don't know how deep the conspiracy goes, but what I do know is that when you look at things that happen around us, okay, and you hear about the trade war tariffs, this is not Smoot-Hawley, this is not Reagan, Bush, and those tax cuts, or those trade wars. This is real, legitimate, hey, let's make a fair deal and not continue with giving it away. If you think about the amount of money and that the United States gives away because of all this, it's not just the trade wars, it's not just the tariffs, it's in general. It's about time that somebody stood up and said, hey, let's be fair. But then you've got Trump, who was kind of not muscled in, but because he was trying to get something and keep some of his promises, signed a terrible bill, okay, which he's now trying to walk back, and I think that's great. I hope that he does walk it back, but you've got, even his own side is starting to squawk, which is why the way the government runs today is broken, okay? Because you've got people like Nancy Pelosi and Booker out there spewing crap. You've got McConnell there and Ryan on the other side. So again, I'm not picking on one side or the other. I don't care. You all know where I stand. I'm really more of a libertarian to begin with, okay? But I don't like the system. To me, the system is is a monopoly in its own that really is designed to punish everybody but the very wealthy. And I think that's what we've seen for the last, I don't know how many years, you know, a long time. And I think this is the bigger problem, and this is the monopoly that needs to be broken up, okay? It's allowing the lobbyists to push their agendas. I mean, is there any reason for oil to still be the number one source of energy? I've heard natural gas for 30 years. Now, you would think a company of this size with as many great things that we come from could figure out a way to use that natural gas that we have. But again, that's not beneficial to the big corporates. So that's why it's not there. All right? Again, you have to think about what's benefited, because at the end of it, it always comes back to the money. All right? So, but again, that's where the control comes in. That's the monopoly that needs to be broken up. This is where, you know, at some point, we know that Social Security is going to go broke. We know that all these problems are going to happen because of the monopoly of morons running the country. All right? And until we break them up, and until we decide that we no longer can have unlimited terms for Congress and senators, until we can get rid of these people that are not doing the job and weed them out and bring hungry people in that want to help it, that's going to continue to be the issues. Because more of the issues are created inside of Washington than ever would ever get there if we had people that really wanted to make the country run better instead of having people who want to line their pockets. That's my opinion. That is Bubba's opinion. And this is Bubba's Bottom Line. And as always, I thank you so much for being here. And we'll see you on Monday for Bubba's Daily Update. And of course, next week for Bubba's Bottom Line. Have a great week, everybody. Have a great weekend. The rest of it, enjoy it. And we will see you on Monday. Take care, everybody.